Hello, chart watchers, and welcome to this Friday, July 20th, Market Watchers live show with your hosts, Aaron Swenlin and guest co-host, Julius DeKepner. For those of you joining us for the first time today, welcome to the show. And for regulars, welcome back. Let's go ahead and take a look at what's going on in the markets right now. There we are. Currently, we're seeing that most of the markets are up, with the Dow Jones up about 37.5 points. The S&P 500, same. NASDAQ took off nicely this morning, but it does appear to be pulling back somewhat. Russell 2000 small caps down, but mostly unchanged. TSX, big gap down on the open and moving sideways at this point. We've got Treasury yields rising today, currently reading at 2.882%. Dollar gap down after breaking out yesterday and is moving sideways. Gold, of course, with the reverse correlation that we normally see, gapped up and is also moving sideways, but pulling back slightly. USO, mostly unchanged, reading 1417. The VIX was on the rise earlier this morning, but has pulled way back and currently reading just above 12.6. Right now, consumer staples are the leading sector, having a very good day right now, up over 0.5%. And that is due mainly to the tobacco index industry group, where we're seeing a lot of movement from Philip Morris, and I'll be looking at that chart later. But right now, I would like to introduce my guest co-host, Julius. How are you doing today?
Hi, Aaron. Hi, everybody. I am actually doing very well. Just to remind you, I will be taking the 10 and 10 requests. So I'm jotting them down on a piece of paper and I will throw them at an RRG while you are doing the tech segments and the reviews. And,
Yes.
and then I will tell you which ones we should have a better look at.
Yes, that sounds great. And so yes, get your requests in early because they'll be closing out earlier than normal for the 10 and 10. And I get to welcome Chip Anderson to the show for Everything Stock Charts. How's everything going up in Seattle?
Hi, everybody. Hi, Aaron. Hi, Julius. Everything's going well here. They pulled me down and out of the server room, and with all the programming that I normally do, and they're forcing me to come and talk to you about what we've been up to, and so we're going to do that in just a little bit.
Yes, and as far as our upcoming schedule for next week, on Monday, I will be doing the Decision Point report to get you ready for the week. Tom will be doing his workshop on Tuesday. We'll find out what it's going to be on Monday. Roman and Bruce, Wyckofian experts, will be with us on Wednesday. And Thursday, we have Dan Russo back from Chaikin Analytics, so you won't want to miss that show either. Today's agenda, though, let's get it started. Everything Stock Charts will be coming on in just a few minutes, another 10 minutes. We're going to look at Dow and Disney is what Julius has in mind for us today. 10 and 10 to 1. Our first symbol will be First Solar, FSLR, if you want to go take a peek at that before. And we'll finish up today with my sentiment update. I'll let you know how people are feeling about the market and what that actually means for the market. All right, but let's go ahead and get started with some technical news right now. Okay. All right, so I wanted to show everybody what's going on as far as the sector summary and the industry report. So I think that that's a pretty important place to start here for our technical news. As I said, consumer staples are leading, and earlier today I was noticing technology was not far behind, but it has pulled back just a little bit with financials now just under consumer staples and are leading. So let's go ahead and take a look at where we're getting the big movement. And as I said, tobacco and personal products are leading, but tobacco right now is up over 2.5%. So let's see who are the big movers within in that group. And as you can see, Philip Morris really hitting it big today, up over 3.5% currently. So let's take a quick peek at that chart. And here we go. So after, the giant gap down that we saw back in April, we've seen mostly sideways movement. But I think if you looked closely here, you could make a case for a reverse head and shoulders coming in here. The shoulders are a little bit on the low side, but I still think when you look at this pattern, that's what I would be looking for. You can see that we finally have a PMO in positive territory. It's been struggling, obviously, since that big gap down. But now it is turning up, it's in positive territory, and it looks like it could outpace these previous tops on the PMO. So I would be watching for that. But right now it is sitting on some overhead resistance. Let me go ahead and annotate that for you here with our handy dandy auto support and resistance tool. Okay. And I do like to make mine translucent. So one of the ways you can do that is getting one of those lighter translucent colors in your bar, and then that way you can have it clear. And I like to make it thick so that I can see a zone more than anything else. And as you can see, after that gap down, this has posed rather difficult resistance right now for Philip Morris. So although we're having this really great day, we can see that it is butting right up against that overhead resistance. So if we get the breakout there and that 20 crossed above the 50, I think we're going to be in pretty good shape here for Philip Morris to carry on further. All right. Let's see. I've got a couple of stocks in the news that I thought I would discuss with you. First of all, I know you're going to look at Disney more closely. Julia, so I don't want to steal your thunder, but Disney did manage to beat out Fox for over Fox. So Disney was in the bidding war with Comcast, and Comcast finally decided it couldn't do it anymore, and Disney won the bid for Fox's film and cable assets. So I wanted to take a quick look at Comcast here. There we are. There we go. So Comcast, they did manage one of the, I guess, the victories for Comcast is they did get that bid a lot higher. It actually added another like $20 billion to Disney's bid in order to outbid Comcast. So I think that was very helpful. I'm looking at this chart though, and I'm going to get the annotation tools out again here. All right. And it looks very similar to Philip Morris. The only difference right now is the fact we did get above that overhead resistance. And it got the breakout and it's pulling back toward that breakout area. That's what you want to see. The PMO is still rising. It still has plenty of room to move higher before it's getting overbought. So Comcast probably did itself a favor pulling out of that bid. And we can see, again, 2050 day EMA, positive crossovers. That gives us an intermediate term trend model buy signal. All right, so let's take a quick peek at Fox. And here we go. So Fox has been, like we were saying, courted to be in the bidding war between Comcast and Disney. And so, looking at what's going on with Fox right now, we did get this rounded top, and we're starting to flirt a little bit with that gap support down here. We've got a 520-day EMA negative crossover, so we obviously can see that we've got a declining trend in play. And if you see these PMOs like this with the sell signal and moving almost straight down, certainly not a stock you should be looking at to buy, maybe short. But I thought that one was an interesting one to look at. And, right now there's talk that, and I've noticed that with Amazon, of course, Amazon Prime, and they had Prime Day, a lot of other companies are trying to figure out how to compete with that. And Walmart at this point is looking at getting into the subscription video service. And so that's going to, put a little pressure possibly on Netflix and Amazon. So I'm going to show you the Walmart chart. And I know a lot of people request this during 10 and 10 as well. And you can see it's been in a rather boring trading channel. Get a look at that here. And there you go. Really clear channel defined here. And if you wanted to even shorten it, you could do that with those March and April movements going sideways. So we hit that overhead resistance here for Walmart, and it is starting to pull back again. So for me, when I look at this, I'm getting a decelerating PMO. Although these EMAs are moving in the right direction, because it was not a successful test of overhead resistance, I would be looking for it to continue lower at this point. You know, the PMO had finally gotten back into that positive territory, but it didn't really, it's not buying us anything, in my opinion, because we have, you know, it's hit that overhead resistance and it's dying on the vine now. Okay, another interesting one, of course, is Facebook. Let's see what's going on with Facebook right now. Up over 1%. You know, the PMO has been sitting here in overbought territory for quite some time and moving sideways. And, you know, you want to see more of these. You don't want to see sideways, because that tells you either you're in, your acceleration isn't really changing over time. That's why it flattens. Because I know everybody, you know, intuitively might be thinking, well, you're in this rising trend. How come the PMO is so flat? It's just because that acceleration is you know, pretty much steady. And so, of course, when you're measuring that momentum and acceleration, that's where you're going to have the issue. We are on a PMO buy signal, however, and the PMO has turned back up. You've got this really healthy scooter too. So when you look at a healthy scooter like this and that breakout we saw earlier in July from this overhead resistance in June, let's go ahead and put in the rising trend channel. Don't need an arrow. All righty. So you can see from back here, it started this rising trend channel, and we had that burst out of the top of it, but it just wasn't successful. It didn't have any staying power. But you can see right now we're accelerating now higher out of that trend channel again, but it does seem to be holding after breaking above that. The last 3 days this week, it's managed to stay above that top of that rising trend channel. So I think that's interesting, as we say. You know, the PMO is overbought. So that is a little bit of a concern for me right now, but we've got a nice move going on. And if we can hold that support there above that 5-day EMA and the top of that rising trend channel, I think we're in pretty good shape here for Facebook. All right. There we go. Some of the key earnings yesterday. I know anybody who was listening to the business channels and as well here, we had a couple of important ones that came through, and Philip Morris that we just looked at was one of them. You know, actually it was said that, you know, they had a weaker e-cigarette acceptance, and so the expectation would have been a big move down, but we're seeing the opposite is true currently with Philip Morris. Microsoft, of course, reported great earnings, and that is, of course, helping it with this really nice over 2% rise. Big gap up here, and it's now sitting at the all-time highs, I believe, here. Let's look at the weekly chart very quickly. Indeed. You know, you look at this chart, though, and of course, my first glance, I'm thinking parabolic move here, and that always is a concern and a worry. You can see as price was moving higher, the PMO was trending lower. But I'd say right now with this PMO buy signal, this really solid breakout on great earnings, I'm not going to worry too much about this parabolic move here on the weekly chart. I think we'll be all right. So right now I would be looking for higher prices, strong scooter, you know, volume is starting to move the right way. Would like to see the OBV today pop up above previous tops. That would be encouraging. But, you know, at this point, we're looking pretty good with the gap up and continued higher prices. And that's going to conclude the technical news right now. And I would like to bring Chip Anderson back in. Hello, Chip.
Hello, everybody. Yep. Thank you very much for that update, Aaron. I'm going to get my slides going while you
certainly
work on this.
There we go. I'll go back to our dash here. And there we are. Ooh, pretty picture.
Thank you. This might be a little more relevant. There we go. All right. So what I thought I'd do today for everybody is to give them an update on what we've been doing behind the scenes here at StockCharts. In the past and in the future, I've done stuff about the how to use the website, but here I thought I'd draw back the curtain and tell you a little about what's going on behind the scenes with two big initiatives that we have. We have our ChartCon conference is coming up soon, and I've got some information about that. I know that some people have already heard about it, which is great, but I want to make sure everyone's heard all the nice details. And I'm going to show you a little bit of the raw footage, the secret stuff we've been putting together for the conference here. And then I want to talk about our efforts of updating our technology and moving into the cloud. So we're been working on that for 2 years, and we're about to make some really big changes that I'm very excited about, and I want to share that with you. So let's start with the ChartCon stuff. Again, I just want to make sure everyone's in sync and understands why ChartCon is such a big deal for us and what you might could get out of it. So ChartCon 2018, it's only a couple of weeks away. It's getting very close. What is it? It's the only online conference. We're 100% online. It's the only conference for StockCharts users and people interested in technical analysis. If you're in either of those categories, and here's a hint, if you're watching the show today, you're probably in one of those categories. This is the conference for you. It is a conference where everyone who shares the same interests that you have will be all be together in one big virtual online event. It'll also be the conference where we have pulled out all the stops to get all of our commentators together to give you a really great collection of presentations from them that are a little longer than what you see here on StockCharts TV, and they're a little more in-depth than what you normally get in their blog or in their writing. So why should you attend? Well, we've got 12 different chart experts that are going to be there and focused and help you understand where the market's going and how you can improve your investing results. I've specifically asked them to work on presentations that focus on helping people with manage risk and manage risk in a volatile market. The markets continue to look like they're volatile and maybe getting more volatile here soon. And so I want to make sure that everyone's prepared when that happens. And so ChartCon, they will talk about a lot of different topics, but I've asked them to all include something about that particular issue. It's on August 9th and 10th, which is a Friday and a Saturday, and it is an online conference. So where is ChartCon? It's online. It's right here in your computer that you're looking at right now. You don't have to travel to attend. I go to conferences all the time for technical conferences. I was down in Vegas recently. I was over in Chicago before that. Traveling to conferences is a pain. It really is a pain. You do get some benefits from physically being there, but there's a lot of costs associated with it, not just financial costs, but also time, energy, being away from your family, all that other stuff. You do not have to travel to attend ChartCon. We did this last time, and we got a lot of people saying they really enjoyed that fact of it. That said, we still work hard to try and make it feel like a conference, and I'll talk more about that in just a minute. As I mentioned, all of our heavy hitters will be presenting. That includes Tom, Aaron, Martin, Arthur, Julius, Greg, Bruce, the other Greg, the other Tom, Mary Ellen, Tushar, David, Dr. Alexander Elder, and more. Even Chip. Chip will be presenting there too. So that's going to be an awful lot of really fun and interesting presentations going on. This is what I wanted to show you, though, is the team here, the video production team, has already been working hard at work creating some of the ChartCon content, and I wanted to share some of that with you now. Okay, and so there you go. You can see some of the stuff we've been working on. I really like we're going to have segments like that for all of our presenters and try and give people a better sense of what they're going to be talking about, so on and so forth. But wanted to thank Tom McClellan and Tushar for doing those. Just to remind everybody again, ChartCon will be recorded, but in order to get those recordings, you're going to need to register for the conference, and you have to register before the conference is going. So if you, for instance, you might not be able to attend the conference live in person, you still want to register so that you can get those recordings. How much is ChartCon? It's $249.95, but that's it. You guaranteed there's no additional cost. As I mentioned, there's no airfare, there's no hotel. You don't have to take an Uber anywhere. There's no meals, there's no restaurants, and these the scam of resort fees, all those fun things. I get hit with those in Vegas. If you've ever been to Vegas and gotten resort fees, you know what I'm talking about. Anyway, none of that hassle exists with this online conference, and it's really convenient in that manner. Again, what will you learn? Where's the market headed? Why do the experts think that's where the market is headed? What charts are they looking at when they come up with their opinions? And as I mentioned, how will they manage risk in volatile markets? Finally, by watching ChartCon, you're going to be learning how to get the most value out of the tools on StockCharts.com. You're going to be seeing these experts use those tools live in their presentations. You'll be able to interact with other people. We're working very hard to give everyone a mobile app that they'll be able to use on their phone or tablet in order to interact with both the presenters and with other conference attendees during the conference. We did this last time. I thought it worked really well. We're bringing it back even bigger and better this time around. How do you register? There are buttons at the top of all of our pages, which you probably have noticed, or you can just simply go to stockcharts.com/ChartCon. And so this next one, Aaron, you might remember this. Can people ask questions during the conference? And in this case, we are doing things a little different, but we're also doing them a lot the same. Every presenter will be available after they make their presentation in a special QA area. And using this mobile app, you'll be able to ask them questions live, and they will be able to answer those questions. But in addition, and I know Aaron did this a bunch last time, you can just simply send messages to the presenters, and many of them will just get back to you with a personal answer. Didn't you do that a lot, Aaron, on the app?
I absolutely did. And I loved posting all those behind the scene pictures. And yes, the interaction with subscribers was absolutely fantastic. I know that Tom and Greg are also really heavy users of the app.
Hashtag me too.
Yes,
Yep.
that's true.
So the app is one of the things that we're adding that's making this kind of more interesting than just watching a bunch of videos. It's part of the way that we're going to make this into a community. Keep in mind that we only hold ChartCon every 2 years. This is a special deal. It's a big deal. We don't do it that frequently, and we want to keep ChartCon as a special event. It's important. It's unique. It's somewhat rare, and hopefully everyone will want to attend that. We've got the agenda. We've got all the list of entire presenters and everything else up on stockcharts.com/ChartCon. I did misspoke earlier. It's the 10th and 11th, not the night. It's the Friday and the Saturday in August. So questions, concerns, or quandaries? Do we have anything come in?
Well, I mean, I think you answered it right off the bat, is whether they can ask questions online like they do here. And as you were saying with that app, it was fun because we did actually talk directly to our users, similar to the chat room. I'll answer you right then. So it is a lot of fun, and I can't wait. I mean, probably the best thing about it is just going and hanging out with all of the folks in the industry, because I can talk shop for an entire 2 weeks. And my husband doesn't have to hear it. So,
Julius, anything to add about your ChartCon experience from last time?
Anything less than awesome? No, it was a fantastic event, and what you guys were talking about, I mean, because it is an online event, there could be some concern about the interactivity, and you can't meet other people, but I think we solved that perfectly with the app and the interaction with all the presenters, with the various people. So, everybody who's attending, even if you're somewhere else in the world, you can reach out to the presenters, and they will actually answer your questions and engage with you. So don't worry about not being there in person.
yeah, somebody asked when will we get access to the app for ChartCon?
Well, if you've registered for ChartCon, you'll start to get newsletters. I think we've actually already sent one out. We'll be sending out another 2 here before the conference gets going. They'll give you all the information you need about the app and about everything else. So register sooner rather than later so you can receive those newsletters and get going. So
Yes.
anyway, I want to talk to you about the other thing that's taking up all my time and all my focus, and that's a good thing, is our move to the cloud. So StockCharts.com has been working very hard to re-engineer the technology behind it. I don't know if anyone's noticed, but we haven't really been releasing a whole bunch of new features recently. But we've been hard at work, and it's this technology underpinnings, the behind the scenes stuff that we've been working hard on changing. We are moving to the Amazon cloud. This is a project we've been doing for at least 2 years now. It seems longer than that. We did a lot of investigation at the start of the project, and we selected the Amazon cloud as our target location. So if you remember last time I was on, I talked about creating cloud charts, meaning the Ichimoku stuff. Now I'm talking about creating a different kind of cloud charts. We're creating charts in the cloud. We want to increase reliability, we want to increase performance, and maybe most importantly, we want to increase future capabilities. If we do our job correctly, this move to the cloud will not really be something that people will notice. It'll just happen behind the scenes, and you won't necessarily see anything different. That's our goal. However, as soon as that move is completed, then we'll be able to really start to take advantage of some additional capabilities that right now we can't do. I'm sitting in a room that's literally right next to our single data center. Every single chart, every single piece of the website that you see on your computer comes out of the data center that's right next door to me. It's here in Seattle. That means that if you're close to Seattle, you get really good response time. And if you're on the other side of the world like Julius, then you get okay response time, but it could be maybe a little better. There's also issues of reliability. We work really, really hard to minimize these issues, but that's part of the problem is we're working really hard to minimize these issues. It'd be much better if we had a collection of data centers to help with this, and so that's one of the reasons we're moving to the cloud, increase reliability. As I mentioned, increase performance by being in more locations than more than just one location. That will help with performance. But in addition, it will also give us access to lots more servers. The number of servers in our data center right now, we have about 100 roughly. We have to maintain those servers. We have to make sure they have power, cooling, that their software is up to date, that they have all the right patches installed, so on and so forth. And if one of them goes down, we have to physically take it out and fix it and I don't know, give it a new hard drive or something. All those problems go away when you're in the cloud. And while I know that our users don't care about those problems per se, they just see stuff working. These are all issues that we have to address and make sure that we manage properly. It's going to become a lot easier to do that in the cloud, meaning that ultimately we're going to be able to do more. As I mentioned, the benefits here, we're going to be charting capacity. So imagine, if you will, what our servers actually have to do on a daily basis. When the market's open, they're working really hard. They get a lot of chart requests. As soon as the market closes, they stop working so hard. There's relatively a much smaller number of chart requests come in, especially like in the middle of the night, that kind of thing. That said, we still have the same number of servers working every single time. We have about 30 servers dedicated to drawing charts. They're very big, very powerful servers, but we have 30 servers even at 3 a.m. in the morning. And if, I don't know, if something interesting happens during the day and there's a huge demand for charts, we only have 30 servers to meet that demand. We work really hard to do that, and we make sure that there aren't any problems. But in the cloud, we could be guaranteed to meet whatever capacity needs are necessary. And then in the evening when things are less busy, we can scale back as well. That scalability is a huge cloud benefit. Multiple data centers located around the world is our ultimate goal. But certainly moving into even a single Amazon data center is going to be much more protected than the data center that we have here. We're eliminating what's called a single point of failures from all over our system. There are a couple at this point, I'll be honest with you. We're working really hard to make sure that they don't fail. But when we get in the cloud, there won't be a single point of failure anymore. We will have multiple reliability situations happening in the cloud. we'll have the ability to massively increase our data capacity. We'll be able to store much more data and provide much more data to everybody than we do now. We have very big data capacity now. It'll be much more massive in the cloud. The ability to monitor our systems bigger, and the ability to create a duplicate of our data center in the cloud so that we can then run tests on that duplicate before we release new software. That's something that we can't do right at this point. We just have one data center. We don't have two, but in the cloud, it's kind of fun. You can press a button and suddenly you've duplicated everything. And you have this testing capability that you didn't normally have. Really, really nice. The final thing is, in order to get into the cloud and get all those benefits, we are going to have to change our data vendor. And we've actually been doing this slowly over the course of the past 6 months. We're moving away from our old data vendor who is not in the cloud, and we're moving into a new data vendor that is cloud specific and designed for the cloud. Their name is Xignite. We've been working with them very closely, like I said, for at least 6 months, and they're doing a wonderful job supporting us. So you're going to see more and more of our data be coming from Xignite. And that slide hides a whole bunch of work, just a ton of work involved in changing data vendors. But maybe the biggest benefit of all this is the benefit that comes after we've completed the move. That's the benefit where myself and the developers here are going to be kind of unleashed, if you will, from the limitations of our current data center. And we're going to be able to start creating newer, bigger, more imaginative, but also more inventive and even aggressive types of systems and charting and tools for you guys to use. So we're really, really looking forward to that. And so the biggest benefit of all is this additional capability, which we're not even sure yet how we'll be able to take advantage of. We have lots of ideas, but we're not committing to them yet. We're still focused on getting into the cloud first. And so I just wanted to do a quick demo of this. What we did as part of moving to the cloud, let's see if I can do this right, is we first created a duplicate of StockCharts.com. This is a duplicate that not everyone can get to. In fact, nobody can get to it but us. It's called StockCharts-dev. Don't try to go there. You probably won't be able to get in. But the point is that StockCharts.dev is a fully working, or mostly working, duplication of our website that's working in the cloud. In fact, let me log out. Log in successfully here, get connected up. Everyone pay attention here. You'll get my password here in just a second.
Hey, my password's all dots too.
Yeah, it's not easy typing those dots. So we still have a little bit of work to do. The market summary chart isn't there, but in general, there's an awful lot of stuff that is working, and it's very exciting. While this particular demo doesn't have the performance capacity that ultimately the cloud will give us, we have been running tests in the background where we've actually simulated more than double the amount of traffic that we currently handle on our website on a regular basis, and the cloud's been able to handle that traffic no problem. We've generated double the number of charts that we normally create, even on a peak day, and the cloud's been able to do it without any trouble. So again, this is just meant to show. The point is that this doesn't look a lot different from what we currently have. I'm going to go out on a limb here. Yeah, there you go, Julius. RRGs in the cloud. I'm going to go out on a limb and try a couple of features, but you'll say, Chip, this looks exactly like what I see on StockCharts.com, and the answer is yes, that's correct, and that's the goal for this particular phase of this project. But it is working on StockCharts-dev, and therefore it is in the cloud. You have to take my word on that. Anyway, so with that, I'm going to just mention that there will be more updates about our move to the cloud and our status of that at ChartCon. I'm hoping I'll have some major announcements there, some additional partnership information that I announced at ChartCon as part of my presentation there. But that's what I have for you today. Again, kind of a little salesy, but and also a little behind the scenesy. But wanted to make sure everyone is aware that we are still working really hard here on these big major projects.
Hey, Chip, can I ask a salesy question?
Sure.
With the move to Ignite, does that mean that it will now be easier for StockCharts to add, for example, European data, like German, Dutch, France, Portugal, whatever?
Well, it is our intention to add that stuff at some point in the future. I'm not sure about easier because there's still all the regulatory issues that we have to get over, pricing issues. But Ignite gives us that capability. The cloud gives us that capability. The cloud, by its very nature, gives us much more data space, much more servers, so on and so forth. All that stuff enables us to grow in a whole bunch of dimensions, including the dimension of additional stock exchanges.
Excellent.
Additional data coverage.
Very exciting.
It is actually. We were kind of cheering. I guess we got StockCharts Dev fully working about a month ago, and that was a big exciting day when that happened.
All right. Well, I'm so glad that you came in and filled us in on all of this. And yes, if you haven't signed up for ChartCon, I just don't know why you wouldn't. So it's just such a great experience, and you do get to keep the videos for life. And you don't have to watch it live either. If you're going away for that weekend, you won't be able to interact with us because you won't be seeing it live, but you can watch it anytime you want afterwards and keep it. So certainly.
Hey, but Aaron, when they're away, they can just bring their tablet and watch it wherever they are, can't they?
Yes, absolutely. You could even do it that way as well.
Yeah, I remember that we got pictures, because last time we asked people if they could send us a picture from where they are attending ChartCon, and we got them from snowy mountains to someone on a boat 100 miles in front of the coast of Qatar, I believe. So
right.
great fun.
It was really fun. I absolutely love it. But let's go ahead and move on because we're setting you up for not as much time as we want. So I'm going to say we should bring it into the 10 and 10 somewhat for you to do your 15-minute presentation on Disney and the Dow.
Yeah, what I'd like, I'm going to take the screen here. What I'd like to do is, because I knew that Chip had a lot to say, so what I wanted to do is grab back a little bit on what I started yesterday, which was going over the stocks inside the Dow Jones Index and looking at a few specifics. If you remember, this was the RRG that we've been looking at yesterday. And we picked a number of names off of this. And I have limited this down to a number that I think are really worth looking at. And yesterday we looked at Caterpillar, we looked at Cisco, and we looked at Nike, I believe. Let me start with Disney, because I wrote a separate blog on Disney, because when I was writing my blog on the Dow Industrials, Disney popped up as something that I thought, well, hey, this is interesting. I need to have a look at this one, which I did, and then I thought, wow, this is a really interesting chart. I need to spend more time on this, which is what I actually did, because this is the chart that this is my general, let me bring in my new layout, my general layout that I pretty much is my default that I use all the time. It gives you the price chart weekly. My time frame is a little bit longer than other people's. So I start off on a weekly chart, and then I have a weekly relative strength line, which is in this case Disney versus SPY or Dow, doesn't really matter so much. And then we've got the RRG lines. Well, if I take it from the RRG point of view, it's nice because they're both rising. That's what puts Disney inside the improving quadrant. And against the Dow, it's already in leading. This is a positive. 2 rising RRG lines is a positive. If I then take a look at the raw relative strength line, as I tend to call it, I see a big downtrend from that lasts more than 2 years, started at the end of 2015. But what catches my eye is that the troughs, and what I mean is the distance between the low versus its previous low, and then here the most recent low versus this low, is getting shallower. They're not as deep. They're not as, this is a real big move, and then you got a big move. So that's shallowing. So to me, it says that relative strength is being picked up a little bit earlier. And then when you start to draw resistance lines, and it's a bit of a subjective thing. Drawing lines on a chart is always a bit subjective, or at least that's what I think. You basically pick any 2 points and you draw a line, but not every 2 lines actually make sense. So I really think that a lot of people draw a lot of trend lines that make no sense. So what I try to do is to find subsequent highs and lows of the same magnitude. And if you look here, you see that I've got this very short dashed line over a number of lows in 2017. That was broken at the end of 2017. That's a positive. You take out resistance, that's a positive. Then it meanders more or less sideways, puts in a few other lows, and I can draw another trend line from that low here. That's taken out very recently. That's another positive. And then you've got the big one coming down from that major high here, connects to the major high of 2017, and we're now actually in the process of challenging that downward angling trend line. You also see that there is this massive horizontal old support now acting as resistance coming in. It acted as resistance at the end of 2017, so there's still a lot to overcome in terms of relative strength. But when we move to the price chart, this is where I got really excited, because this is a massive trading range sideways pattern. But if I only needed to eyeball this, and then when I started to put out the annotation tools on StockCharts, they had actually confirmed what my eyes were telling me, and I got a trend line here that's been touched 4 times, and I've got an upsloping trend line that's been touched 4 times, or maybe if you want to call this 5 and 6, then that's fine, but multiple times. And especially when you have a trend line that's touched more than 2 times, it becomes more reliable. So, any two troughs or lows can draw a trend line. That, to me, that doesn't make much sense. But when you have 3 touch points or 4 touch points or 5 or 6 or whatever, the more touch points, the more reliable it becomes. So this is a massive pattern, a massive trading range. And look at what's happening here. Right now, it's probably sitting at that level of that trend line. It's been above it already, but this is a weekly chart. And, so during the week, we've been above it, but right now we're hovering at that level. Most people who read my blogs, especially if you don't do that, go to the blog and subscribe to it so you get a notification. And engage in the blogs, because I like to talk just as much as I like to engage with people who are ChartCon during the conference in the app. I like to engage with people while I write my blogs during the Discuss platform. Most of the time, I move to a daily chart after seeing something like this. But in this case, I wanted to look at a longer term picture, because you could tell that this is a triangle-like pattern. But to me, this triangle is too stretched. It doesn't really look like a triangle. It looks like something that goes sideways. Now, if you have something like that, the way I do it, I condense the chart and I bring it to monthly. And then you see what I mean. Now, this is what I call a triangle. Here you have a very nice triangle, and you see that whole uptrend that we saw on the weekly, which had a bunch of higher highs and higher lows, is just one big massive move upward on the monthly chart. This is seriously long term, guys and girls. So anyone who tries to convince you that technical analysis is only works only in the short term, right now, show them a chart of Walt Disney and ask them what they think. If you know how triangles work, then this is almost a perfect symmetrical triangle. What it does, it has to break out of that range sometime, because when it runs into the apex, then there is no reason that doesn't work anymore. So a triangle is only reliable in terms of a breakout when it breaks out somewhere between 2/3 and 3/4, so 3/4 of the base of the channel. And the base of the triangle is the start. So that's the dotted line that we have here that runs through the apex. And 2/3 to 3/4 is roughly that green patch that I've drawn in. And you see that we're right now, this is when it has to happen. These this is months, because you can see that the green stuff ends somewhere late 2019. So it's not, doesn't need to happen now or this week or next week. It has to happen in this green shaded area, which is, let me guess, 7-8 months. It can break either way. And a symmetrical triangle can be a continuation pattern or a reversal pattern, and it depends on the way of the breakout. Now, as I said, it is a symmetrical triangle, sort of. But what I like to see, maybe it's me, maybe I'm biased, but what I like to see here is that the support line is angled a little bit steeper than that the resistance line is angled downwards. And it means that the lows on this trend are coming in at higher levels. To me, that tells me that the buyers are more aggressive. They are willing to pay a higher price every time Disney comes down. On the other side, we have the sellers, and they are coming back at lower levels, but they're not as aggressive as the buyers. And right now we're at an inflection point where on this monthly chart, something's got to go and got to give. For this reason, I think that the buyers are in charge, and I would expect an upward break. It's a little bit of a gutsy call, a bold call, because we don't have super confirmation yet. And remember, we're looking at a monthly chart, so the confirmation would be for a monthly close. So this bar here, that's going to be worked on for the remainder of the month until the 30th of July, and only at the end of the month, when we have a close that is, let's roughly say this is somewhere around 112, 112 and a half. So if we have a close that is above 112 and a half, 113, if we can take out 115, that would be perfect. Because then we have a solid break out of this triangle. We have a confirmation that it is a continuation pattern, and that this uptrend that is in place since 2011 will continue. How far will it continue? Another benefit of a very good defined pattern like this triangle is we can measure the height of the pattern. And in this case, it's the high around 115, and the low, which is actually this one here, which is 85. So the height of the triangle is about $30. When we have a breakout, we can project that high in the direction of the breakout. So if we stick with my bullish scenario, we can add $30 to, let's say, roughly 112, 113, something like that. So that's $145, $43. So very, very good upside potential on the monthly chart. Now, to top it off and look at the actual what's happening right now, we go to the daily, and you see that that resistance area around 112 is actually resistance. We had it tested here. That was, I think, Friday. No, that's Tuesday. So Wednesday, Thursday, Friday. So we've tested it a few times. Yesterday was a very good day, but we didn't manage to close above that level. We dropped back. And right now we have another day of testing and challenging that resistance area. You see that there's really a fight going on between the bulls and the bears around that area. How are you going to proceed with this? If you're a super long-term investor, you probably wouldn't mind the few dollars of risk, because I think the risk right now is dropping back to 109, probably maybe 105. But if you got like $40 of upside, that's not a problem. If you want to be very spiffy and very granular in your entry, you might want to think about some money management tricks. You say, yes, I subscribe to this view. I really like Disney. You could buy, for example, 50% of your position right now in order not to miss the rally, and you reserve 50% for a drop back to 109. And if that doesn't happen, then you pick it up when it actually breaks out. Or you can do it in thirds. You buy 1/3 now, you buy 1/3 when it drops back, and you buy another third when it really breaks out. Anyway, that's a little bit of money management. So this is what I wanted to share with you, because these types of setups don't come along very often. Yes, Aaron, I will wrap it up. Sorry about that. It was such a good story, and I saw it, and I dedicated a whole blog on it, and I thought I'd share it with you
Oh, keep
guys.
going, keep going.
Oh, what's that? You keep sending me messages. You should wrap it up, and now for everybody else, you tell me to keep going. Come on.
No, I would never do that to you.
No, that's right. That's right. That's right. But I will wrap it up. Don't worry. So again, Disney. I think you understood that I really like Disney. It's a bit baldy because you've seen that we haven't got any confirmation yet. Actually, we don't have a confirmation on the daily because we need to break, close around 113, 114 maybe. We need to have a weekly close higher. Well, that is today. That could help us. But the real kicker, the real confirmation will be when we have a monthly close, somewhere in this area. So I'm definitely going to keep an eye on this one because I really like what I see here, and I hope that it's going to work out. The good news is that if it doesn't work out, you will know very fast, and you won't lose a lot of money because you can keep your stops inside the triangle formation close by. By the way, the relative stuff on the dailies looks really nice. I mean, the on the RRG, it's in the leading quadrant, it's pushing higher, and I really like this break because this downtrend here, this lower lows, lower highs, has definitely reversed into higher highs and higher lows. So that's really really good.
Yeah, it looks great.
I'm not going to cover any other stocks because that's going to take too long. But I have one question that I picked up from the chat box. Someone asked if you have a stock in leading and in a buy position based on the price chart, would it keep you away if it's turned and rolling over down on the weekly? I think that what the question really is that if you are long a stock, or if you have a stock that is in a very strong trend and it's inside the leading quadrant on a weekly RRG, but you see it rolling over. So you sometimes you have these stocks that are inside the leading quadrant and they have these big long tails and they start to roll over down to weakening. I wouldn't buy it at that time necessarily because it is losing relative momentum. So there's probably a better buying moment ahead. I definitely wouldn't sell it, especially if it's very far away. But the rolling over on a weekly RRG will definitely make me hold back from new buying opportunities. It's not a sell, it's a hold. It's a hold. It's not a sell. And you will probably get a new buying opportunity. I hope that makes sense, actually. I hope so. I mean, OJ, if it doesn't make sense, when Erin is going to do her bit, I will read the chat and probably maybe answer more questions there.
Excellent.
1855. That's it.
Oh, you did great. No, we just have to keep it in mind. It's not like, especially when I have a guest, I don't like cutting them off. So
don't worry.
All right.
I'm no guest anymore. I'm a regular by now.
There you go. And yep, there's your summary chart right now. And you'll want to go take a peek back at the recording to get more of that information. We have those up on YouTube usually by later in the evening. So you can go check it out. Time to do the 10 and 10 though. Let's get the party started. And just so everybody knows, Julius went through the symbol requests earlier in the show and then used his RRG to pick out the ones that he thought would look interesting. So if I pull one up, Julius, and you have something you'd like to add about, what it was doing on the RRG, and that's,
Yeah, actually, and I picked them from the weekly RRG. So
okay.
they're not super short-term stuff. Because there was someone yesterday who said that I asked if I could work from the weekly, because not everybody is a short-term trader like Tom. I thought that was quite funny. So I honored that request, and these are all picked from a weekly RRG. And let's see what it does. When you bring it up, I'll tell you why I picked it from the RRG.
Okay, and Micron did win as most popular, so I did throw that
all right.
one in there. But second place GE, we'll also be looking at that one anyway. So, all right, so let me get started here. So First Solar was one that was requested yesterday. If we don't get to certain requests, I do try and make the first one for the next day something that y'all have requested. So what I was noticing with First Solar is it has been in this trading range since it did drop and have that deep decline back in early June. But we are in a buy signal now. The PMO is still in the oversold territory, I would say. I'd like to see a little bit more action coming out of the scooter and volume. We've got a lot of volume to the downside here on that decline. And you know, we had a not a successful test, a failed test at that overhead resistance line that is, you know, posing as overhead resistance. We're now about halfway into that trading channel. And though I can see, you know, the momentum is gaining to the upside, I just, I'm not really that excited about it, only because we're seeing it come up toward that overhead resistance yet again. And you know, we've failed before, and unless I see a better volume pattern, I would suspect we're going to fail again. All right, the most popular in the chat room was Micron, and I did get a couple of these annotations in early, so I will still be doing some later. But okay, so as you can see, the PMO is on the buy signal. That's why I put an arrow here, but it has flattened on the last 2 days of decline here. And, you know, we've got a scooter, though, that's still doing okay. And the OBV, you know, despite having, you know, that down day yesterday, it did not pop down below that previous low. And so it doesn't make me quite as worried about Micron at this point. But, you know, we did fail here at the resistance line that you could call from the gap. Now the gap was filled, and generally when you do see those gaps filled, I would look for a continuation. But we did have that breakdown from the rising bottoms trend line. So overall, in conclusion of what I see here, we are still on buy signals here. I think that it's certainly an okay hold at this point. You know, you can make a case here for some support over on this top here back in April. So, you know, we could see a bounce right off of here. And while I wouldn't be buying in, I would hold. I would stick around. This one looked so interesting, Julius. I'm not sure what it was on the RRG, but TRX.
That's, you know, I should take a snapshot of my notepad here, because it's like wide. It moves all the way to the right, so it's got a very, very wide, strong rotation.
Yeah, I like this chart a lot, and actually, this is one I'm probably going to throw on the watch list and possibly get into. This is kind of setup I really like to see with the PMO. It's starting to move higher. Look at the on balance volume. It's going in exactly the right direction. You can see all that accumulation as it's moving higher. And the scooter has just been out of this world for quite a while on this. So we're getting that breakout. Now we had a false one back here. So we do want to be a little bit careful, but we are getting that breakout off of a really nice and a strong rising trend. So for me, you know, you could set a tight stop here, but your upside potential is definitely juicy here. So I would definitely consider this as a possible opportunity. This one, yeah, I just was like, oh, I love this chart. All right, now we're getting into some I haven't already annotated. All right, and as with Tom, I always, we usually start with this auto support resistance. I'm going to make it darker this time, and then you can see just if you look in the thumbnail.
PCH, that's I noted that as being very stable on the right hand side of the chart. It's rotating from, you know, from leading to weakening and then back, and it seems very stable. It doesn't have a very long tail.
Yeah, well, I mean, with a 99.9 scooter too. And look at that nice move on volume as it continued higher, that OBV rising. I like the PMO here. It has flattened out a little bit, but that's okay. That was, you know, during that consolidation period. And now yesterday we got a breakout, and it looks like we're coming back down toward the breakout point, which is what you want to see before you get in. So I think this one is certainly a strong stock. I would not be looking for it to to pull back or have a decline. I think you could get in here. You know, I'd certainly hold it if I had it. We'll save those. Next one, Ross Stores. What did you see with that?
Ooh, that one has a very short tail, and that's what makes it interesting to see if you can. It's probably very stable. Short tails are very stable, and I believe this one was, where is it? It's on the right hand side, so it's stable and positive. So let's see if you can find some. Yeah, it's moving into leading, so that's why I picked it. Short, stable, moving into leading.
Yeah, we poked out above that overhead resistance at the June high, and we weren't able to close quite above it. It was pretty much on the line, I would say. And we're trying to get back above that overhead resistance. I like the setup though here. If you notice, we have, you know, rising bottoms here in the more intermediate term as far as the PMO goes. And we're getting ready to have a possible PMO buy signal. The only thing I would like to see, you know, we're getting some deceleration on the PMO off of that breakout, and that is a little bit discouraging, but I think, as you were saying, it's very stable. It's been in this nice trading range. Now it looks like we might be getting ready for a breakout and maybe the establishment of a new trading range. All right, next one was GE. Yes, what's your opinion on GE these days?
Because of the tail and the direction of the tail, inside improving but rapidly moving back to lagging. So I picked that one as sort of a caution indicator or a warning, because from an RRG point of view, I don't like GE at all anymore.
Yes, and you know, I haven't talked to my father recently, but I know he had gotten in around this level, actually. So obviously today is not a good day if he's still there. But we do have the PMO now topping, and it was already starting to decelerate and turn back down on this declining trend. But what is, you know, this is, I told him, I said, I'm just done. I'm done with GE. It's caused me too much heartache and heartbreak. So you know, we've been watching all these different formations, but this, it was very enticing. I'm not going to lie, very enticing. You've got a reverse head and shoulders here. The PMO had just got a buy signal, and we finally had gotten into positive territory. And the problem was, instead of executing a head and shoulders, it started on a declining trend. And now, of course, it's really struggling at this point. I'm going to bring this up just a little bit. So, you know, this is really a case in point. When you have a 50-day EMA that far below the 200-day EMA, that's a bearish configuration. You really should have bearish expectations and not bullish expectations. So even though that pattern looked enticing and, you know, looked good, and even the PMO was starting to show some improvement, you know, we didn't get that bullish expectation. We didn't get the bullish execution. And part of that is because it's in a bear market configuration. You just can't count on those buy signals all the time. So yeah, I told my dad at the time, good luck, but I've given up. It's like, I think natural gas was one that I used to trade a lot. And it just got to be to the point I would get in at exactly the wrong time, and then I would get scared out at the wrong time, and it just one thing after another. I just couldn't get that one to work the way I felt it should be working. But I suspect, you know, going back, we weren't looking at a bull market configuration. All right, so I think this is pretty interesting, because you had this area that was overhead resistance, became strong support, and now we're starting to come right back up above it, where we've broken through. Right now, things are unchanged for RSP Permian, but look at the healthy PMO. We're on the buy signal. It's now in positive territory. You can see that intermediate term trend model buy signal. It all looks really quite good.
Yeah, I picked that one because it's inside weakening after a nice stint through leading, and now it's actually hooking upwards. So it looks like as if it's shrugging off that temporary weakness. I'm ready to move higher.
Oh, this is a pretty chart. G3, what was your Your thoughts on that?
G3. What did I write there? It's rotating back into the leading quadrant. Yeah, that's what you see. You saw the very, the tail is expanding. It's getting longer and longer. The observations are getting wider, and it's moving in the right direction. So that's always a nice thing to happen.
Yep, and look at the positive indicators here on the chart. I like this. Nice breakout from that declining tops trend line, and upside potential here, of course, would be at that high we saw back in June. So I think there's certainly a lot of upside potential here. You could probably set a fairly tight stop, or you can loosen it up if you wanted to, because I mean, that's a pretty nice reward. Just match up your risk to match what you want as far as your stop goes. But I would say, that 46, maybe 45 level would be a great stop at that 20-day EMA. And yeah, the upside potential here is really nice. And, you're saying that it looks great on the RRG as well. All right, 2 more to go. And
AMD.
yes.
Yeah, that's moving from leading into lagging. And I wasn't very sure, so I thought I'd ask you.
Yeah.
It's been rotating on the right-hand side for a number of times for many months. And I'm interested to see. I haven't looked at the chart, but I would look at this chart, seeing if this could be another high-low rotation on relative strength, and that we're ready to move higher after this correction is over.
Yeah, I think it's a very interesting chart. We're getting that nice rounded bottom. It bounced off of the 50-day EMA. The PMO isn't that exciting. It is moving in a flat direction. Looks like it's even trying to turn down right now. But this looks pretty classic as the cup and handle, that's showing up here. I would expect to see higher prices. Again, when you see a scooter of 99.9 and a nice move here with the OBV trending upward, it suggests to me that this is going to be a bullish pattern that'll execute, and I would look for higher prices. All right, last one, I buy.
That was an interesting one. What did I look on that one? Yeah, that one. That's not what is similar to the other one that we just had. I can't remember the ticker anymore, but that's completing a rotation from leading through weakening and now back into leading at the good RRG heading. So interesting to see what you've got about that.
Yeah, so this is a great example. You were talking about the triangles where you want them to execute, 2/3, maybe
Yes.
at most 3/4. And as you can see, it didn't happen on this formation. And now we have very little of the apex left as far as territory. So no matter what the price does in this formation, now that you're at the end toward the apex, it's not going to give, that range is so tight that it could just drift sideways through and have a breakout, or just drift a little bit higher and have a breakout that way, and it wouldn't be really a true execution of a triangle pattern. But I did want to point that out. Yeah, I don't like this chart really much at all. I've got the PMO has topped twice below its signal line, and that was happening even as we were looking at some higher highs, as far as price was going. And so it's still not healthing up at this point, even though we've got this rising bottoms trend line. I mean, we just don't have a healthy PMO to go with it. Oh, I didn't want that one. So anyway, I'll just give this last bit and then we can move on from there. But I want you to see there's that PMO trending downward, even as we're seeing that trending upward. So I would expect to see a breakdown at this point, not a breakout. That's just what I would say on that. So that completes the 10 and 10. And here are the symbols that we did cover. And we'll just go ahead and we'll be right back with the final market update after this message.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.
Now for our final market update here on MarketWatchers Live. You can see most of the major markets are up. We've got the Dow and the S&P 500 pulling back a little bit off of their intraday highs, but still staying in positive territory. NASDAQ really came off of its intraday highs after hitting some overhead resistance, it appears, from Wednesday's top right here at the close. But where the NASDAQ is trying to make a bit of a recovery back higher toward those intraday highs, just hasn't gotten there quite yet. NASDAQ 100, similar, of course. Mid caps also, they're actually doing the worst relatively because they are in the negative territory. Russell 2000 small caps positive. So all of these indexes positive except for the S&P 400. The Canadian market's also down, hit some intraday lows. Looks like it might be testing those lows to continue lower, but big gap down on the open. And we see Treasury yields are on the rise, currently reading 2.89%. UUP, big gap up, but then consolidating pretty much sideways. And we've got gold with the big gap up, not down, the big gap up moving sideways as well, with a bit of a move to the upside. We've been seeing some weakness in gold. Looks like we're getting a little bit more strength coming back. USO is up slightly, 7 cents, 14.20. And we have the VIX is, it's been fluctuating quite a bit today to the upside, to the downside, but now we're getting to really the mostly unchanged area from yesterday's close, reading at 12.75 points. Okay, so that completes our final market update. So I'm going to go ahead and get started on our sentiment update. Did you have anything else that you might want to add, Julius, to that update? Was there something you are looking at?
No, not really.
Okay, just making sure. All righty. So let's go to the sentiment indicators. And that is actually here in my, there we go. Okay, so I always give the preface on sentiment that, remember, sentiment is a contrarian indicator, meaning that when investors are feeling very bullish, that is actually bearish for the market. They say in the CMT literature, when you're reading on that the minute you see anything on a newspaper or a magazine with a bull on it, that's a sure sign that the market's going to crash, because not only is it stale, it's playing on the fact that everybody seems to be bullish at that moment. That's when you start looking for the reversals. So this is why I find following sentiment an excellent tool to add to the toolbox. So let's go ahead and take a look at what investors are doing and feeling right now. So based on the put call ratio, you can see we topped out earlier in the month of July. And as these numbers get higher, of course, that means that we're seeing more bearish activity from investors. And the fact we have topped and are now coming down, that's telling us that investors are starting to get more bullish. And that's okay, I would say, at this point, because it is unwinding. We're not in what I would call oversold territory for the put call ratios here. So there's time for it to continue lower and investors can get more bullish. And then we'll start really looking for a major break here or a reversal. But right now, I'd have to say, as far as the put call ratio goes, I think we are in mostly neutral category, but starting to move bearish for the market because investors are starting to get very bullish. Let's go ahead and look at the American Association of Individual Investors sentiment. This is from AAII.org. And I believe if you go there, you can vote on this poll, basically like our poll that's currently running in the chat room. Just what do you think? Are you bullish or bearish about the market, or neutral? And so I was looking at this, and what really stood out to me is the shrinkage on both bulls and bears. So we pared back on bearish activity and sentiment, but we've also pared back on the bullish sentiment. You know, our bull bear ratio is still what I would call in the, you know, somewhat overbought territory, where you should worry a little bit. Excuse me. But the main thing is we have a lot more people moving neutral. So I have this sense that, you know, we are looking at consolidation likely coming forward, because there is a lot of uncertainty right now. Its sentiment is much more powerful, I would say, if you're getting those high readings to one side or the other. The fact that there's a lot of neutrality out there, it just tells me that that's it's neutral for the market. All right, the National Association of Active Investment Managers, these are the big money guys, and they report what their exposure currently is to the market. And, you know, we've had some peaks here, a lot of peaks here, and generally those peaks lead to downside movement. We don't have what I would call, you know, climactic readings right now with the 82.01 reading on exposure. It's not what I would call, you know, terribly overbought, but it is still elevated. It's still elevated, and so that should leave us a little bit nervous or concerned. You know, when you look at the reading we got here back at the end of 2017, the highest ranking, you know, historical reading we'd had on this exposure. Yes, we went up. We continued that big move to the upside and that parabolic, but it wasn't too far after that we got the deep decline. So I feel like with these numbers, these guys are right maybe in the shorter term as far as with the exposure levels, but generally when they get into that high exposure, it's going to start pulling back. They'll start pulling that back, and then you start seeing prices moving lower. So right now, I would read this as an elevated reading for exposure, but it's not climactic. So I think that this is showing as somewhat bearish for the market because it is elevated. All right, the next one we have Ridex Asset Analysis, my favorite sentiment chart ever, just because, not just because Decision Point came up with this, but I think the best part of this particular chart is it doesn't tell you what investors are quote unquote feeling. This is tracking where the money's going, the money where your mouth is. So we track where the money is. So if everybody's very, very bullish, but then I come to this chart and there's an increase in the bear funds and money market funds, that would make me question a little bit, because okay, you're saying you feel bullish, but your actions are bearish. So let's look at what's going on right now. And we have been in this rising trend for the Ridex ratio. And I want to see it get start to top out here, because a lot of times when you get these high, what I would call overbought readings, you know, that can come in when you want to see it in a price move to the right, to the upside a lot of times. So I'm keeping an eye on this, see if we can get, if we're going to get some climactic moves there, and we'll take a look at that later. But the points I would really highlight on this chart, though, is the fact that we're seeing, you know, this decrease in the money market funds, and in the bear funds, we're starting to see some decrease. Not a lot. I mean, it's mostly flat, but we're not seeing an increase. That is definitely true. And we're getting the increase in these bull and sector funds. So what is this telling us? This tells us that investors are more bullish with the money right now. They're not hedging quite as much with those bear funds, and cash is coming out to go into equities, is what that appears to be. So to me, this shows that you've got investors that are very bullish, and very bullish investors means reversal or bearishness for the market overall. I'm going to show you very quickly the Wall Street Sentiment Survey, and then we'll get into looking at what all of you are looking at for the Wall Street sentiment. This is the poll where we ask, as you can have in the chat room, are you bullish or bearish for the upcoming week? And as you can see, I know Tom and the audience went in bullish as far as daily readings. And wow, this doesn't seem to be updated. Let's see. Let's see if this one looks better. All right, there we go. That's better. Okay, so what we're looking at here, of course, so we've got these readings. The last few readings have been quite bullish on the bullish side. And now we're seeing, less bears. Now for this week, and I'm going to look at this weekly chart for the S&P and see how we sized up last week, and then we'll discuss what we're thinking for the upcoming week. All right. So if I look at what it looks like it's going to happen for this week, it does appear we're going to end up higher, but just slightly. I think we're looking at a mostly unchanged neutral type of week. Tom and all of you in the audience went for the market closing higher. Technically, that's what's going on, but I went in mostly unchanged, and it looks like I did turn out to be in the right spot, the right place there. I do want to point out you're going to start seeing these PMO buy signals today, more than likely after market close, and that's going to move all of the decision point intermediate term PMO signals to buy signals, and that means I'm going to have all green arrows, all buy signals on all 4 of the scoreboard indexes. So keep an eye out over the for ChartWatchers. I'm going to write a bit about that change in the intermediate term picture. So that concludes my sentiment report. Here is the summary of what I covered, and this will be in the MarketWatchers Live recap today, this chart for you. So you can see where we're at, and I would just go right to the conclusion and say that, we have a bearish theme because investors are continuing to get more bullish in their outlook, meaning that's going to be bearish for the market. So for me, what are you thinking, Julius? I think I'm going to go with for next week. Based on this, I think I'm going to go lower for next week for the market closing the S&P 500. What might you think?
I before the show started, I answered the poll with higher.
Okay.
Because I really think the way we're challenging that 2,800 level on the index, so we still need to close above that level today. But I'm going to be ballsy, and well, it looks like I'm going against the rest of the world. Story of my life.
Oh,
Doesn't
not
matter.
that much.
That's I think we can go a little bit higher still.
Right. Well,
if Disney moves, then we'll be fine.
Well, sentiment being contrarian, if we're all saying lower, then that means it's bullish for the market,
Well,
right?
that's what I mean. I was gonna interrupt you when you were doing the sentiment update, because the way I always try to explain to people, when you're in a party and everybody is telling you that stocks are going higher, I always tell, okay, so if someone is telling you stocks are going higher, what is their position?
Right.
They are super long.
Mm-hmm.
What is the next thing that they are going to do when they come to the market? There's only one thing they can do.
Right.
They can only sell.
Exactly.
And the other way around, if someone tells you that the stock market is going to crash, he is 100% liquid, or even worse, he is short.
Right.
What is the next thing that guy is going to do if he comes to the market?
He's got to buy.
He's got to buy. And if he is short, he is a victim, because he's got to buy twice to start challenging the market again.
Yes.
That's very, very valuable stuff, those.
I love the sentiment. I love the sentiment charts. All right. Well, it looks like most are going with lower for the market coming up this coming week. And, for me, I'm waiting for my short-term indicators to just unwind a bit more. But the sentiment is telling me that I'm sort of expecting this consolidation I was on the fence between mostly unchanged and moving lower, but I decided based on my analysis of those sentiment charts for the shorter term, I decided to go with lower. So I will let everybody know next week how we did on that, and we'll see how you did as well, Julius. I think most of us out there hope that you're right. I mean, it's it's always nice when you're invested.
That's true. That's true.
All right, so here's our upcoming schedule for next week. It's going to be a busy, busy week, highlighted by, I would say, well, Tom's workshop and Roman and Bruce coming in to talk Wyckoff. So highlights for next week. Looking forward to having everybody here next week. That'll be great. But let's go ahead and close it out, Julius. I want to thank all of you for being with us today. And, please remember to complete that survey as you exit. We love to get your feedback. And Julius, I know, likes to hear how you, felt about his presentation, me as well. So go ahead and fill out those surveys. And as a quick reminder, MarketWatchers Live airs 5 days a week, Mondays through Fridays, from noon to 1:30 p.m. Eastern. Have a great afternoon and evening, everyone. We'll see you back here tomorrow. Not tomorrow, on Monday. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.